Good evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surbhi Upadhyay. Well, it was not a great day for the bulls. It began as an even tug of war between the bulls and the bears, and that was quite heartening because the Chinese data that came early morning indicated that industrial profits in the month of August had contracted by 8.8%. There was no prior evidence for many years of profits contracting by so much. In the month of July also it had contracted, but by 2.9%. So it was expected that the markets will react negatively, but the markets actually held on. It was a very choppy day, and the Nifty went from red to green and green to red about 20 to 25 times through the day. It was as choppy as that. But post 2:30, there was this big capitulation that we saw in shares. One, because Europe opened on a weak note and fell even further because of news from Volkswagen that Audi car sales also could be impacted. A lot of auto ancillary shares started falling, but surprisingly even the banks started falling. So clearly it was long positions in the market that were being unwound ahead of the credit policy. It's not a great day for the bulls, but it's still a wait and watch day, and tomorrow is going to be the big day. Hi, Surbhi.
Hi, Lata. Yeah, I guess the only saving grace is that this last half an hour fall didn't come on very heavy volumes. I guess positions were light ahead of the big policy, as you mentioned. On that note, let's get to the headlines. A sudden last half-hour nosedive sends bulls running for cover on Dalal Street. Benchmark indices lose 1%, with the Nifty ending just below the 7,800 mark. The Sensex falls nearly 250 points. Metal, auto and capital goods stocks lead the decline.
Mixed day for pharma stocks. Dr. Reddys surges 6% on launching the generic version of gastric drug Nexium. Pharma and Sparc, however, end lower after the US FDA revokes approval given to Sparc for an anti-epileptic drug on compliance issues with the company's Halol plant.
The mid-cap index gives in to the late afternoon selling pressure, ending down about 0.25%. Motherson Sumi falls 5% as the Volkswagen probe spreads to 2.1 million Audi cars. Lanco Infra surges 17% after the company signs power purchase agreements with Telangana and Andhra Pradesh. Sugar stocks like Sri Renuka, Bajaj Hindustan and Balrampur Chini spike up 4 to 11% as global sugar prices bounce off multi-year lows.
The Bank Nifty gives up the day's gains ahead of the Reserve Bank's monetary policy. 85% of respondents in the CNBC-TV18 poll expect Governor Rajan to slash the repo rate by 25 basis points tomorrow. Those were some of the headlines that occupied the street's mind space, and here are the experts that we have lined up on the show for you. Pramod Gubbi of Ambit Capital will join in with his take on the markets. We will also tell you what bankers like Melvin Rego, the Managing Director and Chief Executive Officer at Bank of India, are expecting to see from the Reserve Bank policy tomorrow when it announces the monetary policy. We will also listen to Aditya Puri of HDFC Bank on how bankers are reading the government's decision to strengthen the joint lending forum of banks.
Well, before we get you all of that opinion, let's tell you what exactly transpired today. It was after more than 5 hours of the opening bell going off on Dalal Street that there was barely any action. What was promising to be a pretty sedate day of trade took a turn for the worse in the last hour. In fact, the last half an hour to be precise. We've got Anuj joining in to talk about what a dramatic change we've seen in that last half hour. Anuj, quite a major sell-off that suddenly came between 2:30 and 3:30.
Well, it was turning out to be a normal day for the market till about 2:30 p.m. The market was flat, not going anywhere. Typical first day of new series ahead of a big event like RBI monetary policy. But in last hour, the market had a bit of a nosedive, and it was led by European markets. The European markets all of a sudden tumbled, and that was because of the Volkswagen issue and further updates on that. Whatever it was, the short point was that the market ended at the low point of the day, again at that 7,800 mark, which in past has been a bit of a support mark. In terms of individual names, pharma stocks did see some selective buying in trade today. In fact, let's talk about the stocks then. The stocks that led the market decline today in terms of heavyweights, Tata Motors, another 52-week low for that one. Infosys was down about 3%. Larsen & Toubro contributed quite a bit on the downside. Apart from that, commodity stocks were lower today. So there was a tinge of global Q clearly playing out in the markets today. Stocks like Vedanta, Coal India, Tata Steel, all of them were lower. In terms of some other losers, we had Sun Pharma that was down, Z Entertainment was down, and Bharti Airtel was lower as well. On the gaining side, stock of the day today was Dr. Reddys. Big gain, 5% higher in a weak market. Idea was higher and Lupin gained as well. In terms of non-index movers today, Motherson Sumi, again down about 4% in trade today. Again, the whole European issue clearly bothering the stock. Sun TV was down close to 4%. And IDBI was the big gainer. That stock gained about 7% at last closing. And finally, new stocks were added to F&O. Not a good day for them. NCC, Bharti, in fact, TV18, all of them were down quite a bit. TV18, of course, the owner and producer of the channel that you're watching. So all in all, a weak day. Now, tomorrow is the policy. That's a make or break event. At least that's what a lot of people believe. But it does look like that the downside risk to this market is now slightly higher than the upside risk.
Well, ominous words, Anuj. Thanks a lot for that. Yes, it's quite clear that the market is going to the credit policy with some expectation. Actually, the market has lightened up its positions considerably. Whatever long positions were assumed today have been shed to some extent by the evening trade. But nevertheless, there is a hope. The rate cut hope is definitely there. That's priced in. That's perhaps not expected to move markets much. But the markets will await what Governor Rajan has to say. It is the talk more than the walk that will be watched. And therefore, there is a good chance that if the market's mood is as bad as it is today, post the talk, which could well be very neutral to hawkish, the markets could find further reasons to sell off.
All right, some anxious hours lined up ahead before we get to that policy announcement. For now, it's time to get our first market guest in for the evening. Pramod Gubbi, Director Institutional Sales at Ambit Capital, believes that with growing uncertainty in the global market arena, 7,500 is nowhere close to the base for the Nifty.
If you leave aside the global macro and just focus on domestic earnings growth, I guess we're looking at an earnings growth of somewhere between 5 and 8%, and that's the sort of upside we should see for this market at best. I don't think anything is sacrosanct given the way things are moving in markets globally. I don't think 7,500 is anywhere near the base. Things can get uglier as we go forward if data points such as today's continue to come through from this part of the world, or the Fed rate hike decision is not seen particularly well by investors. I think the focus will still remain on the exporters and some defensive sectors which have at least some visibility of earnings growth unless we see any meaningful recovery in the domestic economy. We'd continue to focus on defensives and exporters. So to that extent, pharma and IT would be right up there, and this development is much broader than just IT. I think there are several examples in different sectors which are implementing digital initiatives and reaping the benefits through efficiency gains and flowing through return on capital.
All right, now let's talk about the big event that's lined up tomorrow. The Reserve Bank of India will announce its 5th bi-monthly credit policy on Tuesday. And most people on the street seem to have factored in a rate cut. In fact, we saw that initial rally in bank stocks. They gained ahead of that crucial announcement. Of course, afternoon trade turned everything on its head. Lata, I think 85% of the respondents suggest that we could actually get a cut this time.
Yes, I'll run through the poll. The first question we asked people was, do they expect a rate cut? And almost everyone said yes. As you said, 85%. Will he cut the CRR? And most people said no. Not most. Everybody said no. Will he cut the SLR? Over there was a little bit of a mixed move with 70% saying that the SLR could be cut, 70% saying that the SLR will not be cut, and a few saying that it could be cut. The other important questions were quantum of rate cuts after the September cut, or rather including the September 29th cut. Now 55% said September 29th, one cut and that's it. No more cuts for the rest of the year or the fiscal year. But there is still 45% who are expecting another cut or another 2 cuts, as you can see. So that is the set of people who could be disappointed if the governor doesn't indicate such a space. The governor is expected to largely keep the GDP forecast unchanged at 7.6%, or even there, 20% think he will water it down a bit given the global weakness. It's on inflation that there is maximum expectation. Why will the governor cut rates? Because he will lower the inflation forecast for January 2016. At the moment, it stands at 6. And only 35% thought he will leave it alone at 6. 65% said it will be lowered. Some of them thought it will be lowered between 5.8 and 5.9. Some thought it will go to 5.5. And some thought, 10% thought he would even lower it below 5.5. Will he signal more rate cuts? That was the most important question. That is whether the tone will be hawkish or dovish. 70% said he will not signal more rate cuts. So technically, most of the economists at least have priced in what you call a hawkish cut. I cut, but I don't give more hopes for dovishness. Now, aside from that, how much of that is factored in? My sense is the stock markets have not quite factored in. Almost all brokers we speak with, equity brokers, would think that the governor ought to signal more rate cuts, irrespective of what he will. So the disappointment will definitely be felt in the stock markets if he sounds like, oh, I have nothing more to do at this point in time. There are two phrases the market will watch out for. The previous phrase, which gave us the sense that he is going to cut, was emerging opportunity for accommodation. If that phrase is dropped, then clearly he is not looking for opportunity for rate cut. Chances are he will drop it and the equity markets will react negatively to it. I don't think the bond markets will react negatively because in the first place, a majority are not expecting much. For the bond markets, the key point will be whether the SLR will be cut. And that's the chart they will watch. 70% think it will be unchanged. But there is a very good chance that he will say, starting December, the SLR will go down by 50 basis points every quarter or 25 basis points every quarter. That actually means they have to, the banks have to hold less bonds and they have more money available for lending. But that will also mean that there will be less demand for bonds. So in the distant future, bond prices can fall because there isn't much demand. But my sense is even over there, the disappointment will be knee-jerk for the moment because most banks are holding much more than they need to hold. So short point, equity markets could be in for a bit of disappointment. The bond markets will not react much.
Okay, well, we're waiting and watching the outcome of that all-important meeting. So that's what the poll is indicating. But now let's listen into what bankers, economists and brokerage houses are expecting to see tomorrow.
More than the rate cut action, what is important is the message which he gives in his statement. The monetary policy stance which he takes, I think, and if he takes a cautious stance in that regard, and I think he would, I think that will convey more than the actual rate cut.
Moving on other issues, the Reserve Bank is clearly walking the talk as far as dealing with default loans or NPAs are concerned. On Thursday last, the Central Bank amended the guidelines on Joint Lender Forum. It's a forum of bankers which looks to form a smaller empowered group which will monitor how banks go after borrowers. Here's how leading bankers are reading this move from the Reserve Bank.
All the measures are aimed to solve a problem. I think the measures are good.
Yes, sir. But do you see them effectively helping the banks, give them more teeth in the resolution of NPAs in the long term? Or do you also foresee challenges, as with SDR, maybe getting shareholder?
No, I think if you link what the finance minister said today in terms of speeding up the legal system, coupled with the measures from the Reserve Bank, I think the banks will gain.
Most of the jailers are there with both of them on board. So from that point of view, I don't think there will be much of a difference. But the fact that these two people have been asked to be permanently there also speaks of the quality of these two institutions related to others. So maybe there will be some sort of direction which will be sure and also certain, so that we can get some resolution at the earliest.
All right, those are some reactions coming into the RBI's moves late last week to strengthen the JLF mechanism. Now let's get a little stock specific. The pharma sector was in focus today, and Ekta is joining in to tell us what kept that space abuzz. Ekta, it was all over the place. Reddys surging 5 to 6%, but Sparc and Sun Pharma having their own issues.
Well, I'll start with Dr. Reddys because they launched Nexium generic in the US markets. Now, why is that important is because there was some uncertainty on whether or not Dr. Reddys would be able to take advantage of this $5 billion limited competition opportunity that they had simply because it was filed from Srikakulam. However, there was a site transfer which was being taken place, and now we understand that the site transfer, which began in March to April, has been successful for Dr. Reddys. Hence, they can possibly earn from 50 million upwards to around 100 million in the next 6 months because of this Nexium generic launch, which is basically a drug used for heartburn. Sun Pharma, on the other hand, did not have it as good because the US FDA has rescinded its earlier approval that was given for Ellipsia XR, which is an anti-epilepsy drug, to Sparc. This was on account of compliance issues at the Halol plant. Hence, remember that earlier this approval was given in March 2015 but was taken back by the US FDA. Hence, it provides uncertainty or gives uncertainty with regards to Sun Pharma's current situation at the Halol facility, whether or not it's graver, it could turn into an import alert, and what happens to other opportunities such as Gleevec generic, which is also lined up in the coming years. Besides that, we also had other pharma stocks in focus, where it was Wockhardt, which came out with a statement saying that they've not received any communication from the US FDA with regards to the Waluj plant. Remember that the Waluj plant or the facility has been under import alert since 2013. And Fortis, lastly, is going to buy back 3.1% stake in its diagnostic company SRL for 105 crores totally. This is from two investors at 423 rupees per share, and the holding in SRL will rise to 57 versus the current 54%, and it values the entire entity at over 3,000 crores.
Thanks a lot for that, Ekta. Well, the dominoes keep tumbling courtesy the Volkswagen emissions scandal. Companies like Motherson Sumi and Bharat Forge tumbled in trade today on the back of fresh bad news from Europe and from Volkswagen. Sonia Shenoy is here to tell us what's hurting these stocks. Sonia, what are you picking up?
Well, today there was fresh bad news coming in on the Volkswagen emission scandal. Audi, Volkswagen's luxury car maker, was hit by the scandal, as Volkswagen said that 21 lakh Audi cars have now been impacted by the emission scandal, and Volkswagen has suspended the R&D heads of not just Volkswagen passenger cars but Audi and Porsche as well. Now, remember, 21% of Motherson Sumi's FY15 sales comes from sales to Audi, and 40% of Motherson Sumi's FY15 sales comes from the group itself. So Motherson Sumi was under intense pressure today. Not just that, the Volkswagen emission scandal has now hit other parts of Europe. News coming out that Switzerland is considering permanently banning the sale of Volkswagen diesel cars. Currently, Switzerland has temporarily banned the sale of Volkswagen diesel cars. The estimate is that 180,000 Volkswagen Group vehicles which are not yet sold or registered could be impacted because of this ban in Switzerland. It will impact not just the Volkswagen passenger cars but all the other group cars like Audi, Seat and even Porsche. Remember, in the scandal so far, 11 million vehicles have been affected worldwide. In our own markets, apart from Motherson Sumi, Bharat Forge also supplies to Volkswagen in Europe, so that could be another stock under pressure.
All right, Sonia, thanks so much. Yes, those stocks stumbled immediately as that news came out of Europe. We'll slip into a very quick break now. But coming up, Sudarshan Sukhani is going to be joining in for a technical chat on the market.